What's up, guys? I'm back. Thought I would do one last video this lovely afternoon here in New York City. But I thought I'd discuss float. A lot of people are mind blown when a stock goes from $2 to $38 in the matter of a couple weeks. That's a pretty big deal. More times than not, those runs are bullshit. A lot of the times it has to do with the float, and if you don't know what the float is, you should probably learn what the float is. But just to give you the skinny, the float is all of the available stock that's out there to be traded. So I'm going to give you a quick example. I'm going to compare HMNY, which is the MoviePass stock, had a real nice run from about 250 to 40. What was this last year in September and October? So that was quite the move, and I think it's important to show you what it all means. So if you go in, I like to look at the float data on Yahoo. It's about the only thing it's good for. It's just right there. I'm not sure how accurate or up to date it is. I'm sure it's within the last couple of months, maybe even a year. I'd be willing to bet, though, it's the last few months. But regardless, so right now, HMNY has 47 million shares floating around out there right now. That is not. That's incredibly small. Let's just be honest. Anything under 100 million shares is subject to insane manipulation and insane runs. To compare this with something reasonable, they're like Bank of America, for example. Bank of America has 9.79 billion shares outstanding. So it takes a lot for a stock to move when there's that much out there. And just to give you a feel, that's $303 billion in stock that's available to trade. And let's just compare that to HMNY, which has a float of 47.29 million at its current price of what, 66 cents. We're talking about $30 million out there. So you're telling me that a couple of hedge funds, maybe a few private equity groups, maybe some private guys, some institutional guys can't gobble up the shares, scare the shit out of the street, and run the stock up. And that's what happens when the stock has a low float. All it takes is a couple of big fish to throw a rock into a pond, and that creates the ripple effect. When you get a stock, let's go back to the chart. When you get a stock that pops out like it did on just ridiculous volume, on 1,000% increases in volume, that attracts other traders, that attracts the active guys, and that starts fueling the fire. These can get real dangerous. These can get out of hand real fast. I was at a group downtown, and I saw several guys blow up several $100,000 shorting parabolic moves because they thought it was the top. So when you get interest in a stock, and this was all about the hype, the MoviePass hype, when that happens, you have smart institutional funds and you have algorithmic traders that trade these guys and push them higher and put out large bids and front run orders. And this is the cream de la crop for all the HFTs out there. But for example, Bank of America, you hardly get a move, and when you do get moves, you trade a lot of volume. It's not unseen to have Bank of America do 100 million, 150, 200 million shares in a day. That happened, back when Trump was elected. This thing trades an insane amount. When in contrast, HMNY, on a good day will do 20, 15, 10 million shares, and that will send the stock up multiple hundreds of percent. So it has to do with the bucket of shares available to trade. When there's a small bucket of shares and everyone wants shares, the price of those shares are going to be higher. There's a lot of fucking demand. There's no supply. But on the contrary, when there's Bank of America and there's a ton of supply and there isn't a lot of demand, you're not going to get a lot of moves. You're going to get fractional trading as Bank of America trades. You get those 1%, 2%, 3% moves, 3% on big volume, I should say, and that also ties into overall market liquidity. But keep an eye out on float. You guys want to know the floats of the stocks that you're trading, especially if you're short. If you're short, you want to know how much this thing can run. And days to cover is also another metric to follow, especially when there's a large short float. If there's a huge percentage of shares short and all of those were to be converted and killed and close the position, it would take, X amount of days. A lot of times it's 5-10 days if all of the short interest were to cover. And that's what happens when you have these big parabolic run-ups. More times than not every time. Sometimes it's just, institutional buy algorithms that, send out calls and robocalls and text and this and that. It's a giant game. everything's being manipulated by the banks. Obviously, the trading scene is as well. We're being regulated out of like 1970 and 1980s legislation, so you can see how far back and far-fetched it all is. Don't think much is going to change under Trump. Thought I'd put this out briefly, though. Keep an eye out on the float numbers, guys. Low floaters trade like crazy. They give you a lot of opportunities to make money. I know a bunch of guys doing so. I'm slowly starting to get into the game myself on the option side, but those opportunities are fewer and far between. But yeah, hope you liked the video. Comment, like, subscribe if I said anything wrong. If not, I'll be back with another video. Hope to see you soon. Cheers.